Hey guys, Kill Stokes here, and today we're going to dive into 3 really great questions about trading strategies. Back in episode 1277, so the episode before the previous episode, we talked a lot about the optimal path that a trader should take when learning a trading strategy and working along that journey of trading live. Well, that episode sparked a ton of amazing comments and questions, and I wanted to take some time to respond to a few of them that you guys sent in. Now, before we jump in, I just want to say a big thank you to everyone that supported the podcast by dropping comments or asking questions or participating on the poll question. I know it doesn't seem like much, but it is very important, right? I've been chatting with someone on Instagram recently who I'm pretty sure is trying to sell me something and is waiting for that right opening to do so. But because I deal with like 10 of these guys on an everyday basis, I never give them that opportunity to do so. But one of the questions that they asked me is, Akil, what do you want out of trading? And 2 of my answers were 1, freedom, and 2, to give value. And one of the reasons I started the Trading Coach podcast was to provide an opportunity for those who don't have the opportunity to work with us at tier 1 to continue and get help along their trading journey. And the fact that you guys have been so committed to watching and listening each and every time, so committed to giving feedback, providing questions, helping others out. This is just the community that I wanted to create here. So I appreciate you guys for that. And I'm glad that your participation was able to inspire another great episode. Probably should have mentioned this earlier, but this is a video episode. So if you are audio only and you want to see the visual experience, head over to the YouTube or head over to Spotify to watch it. And let's jump in. So here's what we're going to cover today. It's going to be 3 questions, but a few different topics within those questions. 1 is going to be trading multiple strategies. Another is going to be adjusting your strategy or strategies to changing market conditions. Another one is going to be, is trading more always a good thing, or can it also be a bad thing? And the last one is going to be how multiple strategies can morph and combine into a single strategy. So let's start with the first question, or I guess kind of comment. Our trader said, let me read this here. Akil, it is an advantage to be able to trade more than one strategy rather than be a one-trick pony. Then you select which strategy to use based on market conditions, ... and the asset class. And there are 2 points of this question or comment that I want to touch on. The first is going to be different ways to scale your trading. And the other one is going to be chasing market conditions. So let's start with the second one. Yes, I am a fan of diversification, and personally, I like trading different trading strategies, right? It allows me to have more frequency in the market, which means more opportunity to trade. It also allows me to take advantage of different market conditions. Now, what exactly do I mean by different market conditions? Well, generally the market does 2 things, right? It moves directionally, up or down, we call those trends, or it shuffles sideways like MC Hammer for some reason, which we call consolidation. So for example, if you are someone who is trading a trendy or directional strategy, not trendy meaning like it's popular, but trendy meaning it follows the trend, that strategy is going to perform great when the market is directional, but it's going to struggle when the market hammer dances sideways. On the other hand, many counter-trend trading systems or strategies that go against the trend, they're going to get crushed during those directional moves, but they will be able to take advantage of the sideways chop. Now, what I'm about to tell you comes from both personal experience and personal experience of working with many, many traders who have had their own personal experiences. But the thing we like about trending strategies is the fact that we've all been told and maybe partially lied to that the trend is our friend, right? It also is kind of wowie when we see these big moves. And if you ever looked at a chart during or testing a trend continuation strategy, you're going to have some really, really, really big moves. And typically we tend to lock in on those. But during the times when the market is not trending and it is going sideways, I'm going to put this in the most professional technical term ever, you will get beat to death. Yeah, that's pretty much it. But seriously, your strategy is going to struggle during those directional periods. You're going to make money hand over fist. However, during those consolidative periods, you're going to get hit with loss after loss after loss after loss after loss. And from a strategy development perspective, not to get too far down that rabbit hole, what we want to do is we want to develop filters that don't avoid those losses, because you're going to take losses at some point, but rather can survive those losses, meaning there are filters that either allow you to get out of a trade with less risk as soon as the market tells you that this is not going to work, or maybe instead of having this consolidative period and you taking 10 losing trades, maybe you add some sort of filter to kind of slash that number in half, so you take 5. The point is, our job as traders, especially in like a trending environment, is not to avoid losses, it's to survive them. I guess bigger picture, from a general trading perspective as well, understand that all traders go through drawdowns, meaning that we have periods where our equity curve is going up and looking good. We have periods where our equity curve is going down and looking bad, and there's sideways as well. And a lot of traders get freaked out during the drawdown because they think their strategy is broken, they think they're bad and they suck and all that fun stuff. But the truth is, every trader suffers a drawdown. The difference between a struggling trader and a successful trader is that when a struggling trader catches a drawdown, they freak out, they panic, they make mistakes that end up making their drawdown even worse. So they take trades that they're not supposed to take because they gotta like get revenge for that previous loss, and then they end up losing more. Or they get scared, they don't want to experience another loss, so they move that stop loss in hope of avoiding a loss, and it just makes you lose even more. Or maybe you're fearful of the next trade because you're like, oh my gosh, I took 5 losses in a row. That 6th one has to be a loss. So you never take that 6th trade, and that's the winner that would have helped you climb out of that drawdown, and now you're still in a drawdown because you didn't catch the winner. Struggling traders do all this dumb stuff, and I don't mean to call you dumb, because again, I did the same thing, but we take dumb actions in the market, which tend to make our situation worse. It's again, the struggling in quicksand reference, which I've never been in quicksand, so I don't know if it's actually true, but from the amount of movies I've watched, Indiana Jones and just to name a few, have taught me that if you are in quicksand and you try to fight out of quicksand, you will just sink quicker. If you guys want to go out and experiment that and give me some feedback, feel free. I'm a city boy. I am not going near any quicksand. But back to the point, the point is, struggling traders make their situation worse. Successful traders understand that we just have to kind of survive during that period until that next wave of win comes. Now, the problem that I have with the trader's comment when it comes to, hey, I want to trade multiple strategies so that I can switch to one and during one condition and then switch to the other during the other condition, is the fact that in general, right, I'm not saying this is impossible, because I try not to say stuff like that. There are people out there that have done everything. Again, the Market Wizards book has taught me that you can be successful trading astrology. So if you can do that, there is something for everyone. But in general, speaking for the normal average trader, right, understand that we don't know what the market condition is until the market condition is already in that condition, right? So let me ask you guys this question. How do we know that the market is trending? Well, when we see it trending, okay? Well, how do we know that the market is consolidating? Well, when we see it consolidating, right? Do you see how we're always a step behind, right? By the time we know that something is trending, it's already trending. By the time we know that something is consolidating, it's already consolidating. So if we're playing this game of, hey, I'm going to have my consolidation strategy and I'm going to have my trending strategy and I'm going to flip back and forth based on the market conditions. Ooh, that was a fun dance right there, right? What I'm going to do is I'm going to miss many of those trend trades because I'm waiting for the market to be trending when I should be taking trades in order to flip to my trend strategy. And I may still catch a little at the end, but I'm probably missing a good bulk of profit. And the same thing goes for consolidation. So rather than having multiple strategies, because I am a fan of multiple strategies, but rather than having multiple strategies and trying to do this timing thing where I flip back and forth, my opinion and my suggestion is that you consistently trade both. And what I mean by that is this, right? You have your consolidative strategy, you have your trending strategy. Now you want to make sure that you don't get conflicting signals, or if you do get conflicting signals, just trade them on different accounts. That way there are no conflicting signals aside from mentally, I suppose. but trade them both. And that way, when the market is in consolidation, right, your consolidative strategy is taking advantage of all of those moves. Your trend strategy may be taking a few losses, yeah, but your consolidative strategy makes up for that. And then when the market is trending, your trend strategy is killing it. And your consolidative strategy may have a few opportunities, but your profitable strategy is more than making up for it. I think that is the most appropriate way to go about it. And I say that because, remember, as traders, we don't know the future, right? The market can do whatever it wants, whenever it wants to do it. It can care less about our ideas. So we never know what's going to happen. But our job is to, one, have a strategy that has an edge, which is a statistical advantage. And then two is consistently exploit that edge. And we work on something called the law of large numbers, meaning that I don't know what's going to happen today, tomorrow, the next day with my strategy. It could be great, it could be poop, who knows? But I know that if I consistently execute that edge, bigger picture, end of the year, my balance sheet is going to be in the positive. So my job is to consistently take every single opportunity that meets my rules versus try to pick and choose, right? This goes back to the old coin flip reference, which I know there's some debate over it, so don't overthink this. But if we're flipping coins, I don't have a coin to flip, but if we had one, I would flip it in front of you. And I'm saying that, hey, let's play a game. Every time I win or every time it lands on heads, I get $2. Every time it lands on tails, I lose $1, right? So I got a 2-to-1 risk reward there. And theoretically, there should be a 50-50. If we flip the coin 100 times, it should land on heads 50 times and tails 50 times. Again, don't at me with all the details of it. Just keep it simple. Now, when we play this game, I know I have a statistical advantage. I know that the win rate is 50-50. If I win 2 when I win and lose 1 when I lose, well, that's good for me. I'm going to be profitable after 100 trades, most likely, right? However, if I have that same kind of deal and I'm like, okay, I'm gonna bet on this first flip. Oh, it lost, but I'm not gonna bet on this second flip. Oh no, I missed it, right? You can see how we're pretty much killing our edge. We're killing our consistency, and that goes from trading something that has a proven statistical advantage to just random action in the market. And the truth is, many traders fail, or many traders' strategies fail because they think they are doing something that has an edge, but it's actually random. And it's random because either they haven't tested it, so they have no idea if the results are actually in their favor or not. I shouldn't laugh because many traders do it, but it's actually kind of funny if you think about it. Or they do psychological stuff, like I mentioned earlier, to disrupt that edge, and it winds up being random. So don't be random, be purposeful. Just to give a little bit of an example about this, because there's been a lot of talk about how kind of I develop my trading strategies, right? So I'm a counter trend trader by nature, meaning that when I first started trading after the weird phase of doing all the dumb stuff, once I first started trading successfully, all of my trading strategies were counter trend based. So they took advantage of consolidation. Now, keep in mind, I operate mainly in the Forex market, and the Forex market tends to consolidate more than it trends. So it's, I'm not going against the grain as much as you may think, but the fact is it's much more aligned with my personality and my philosophy in the market. I'm not great at holding moves for long periods of time and watching them ebb and flow and take profit and give profit. That just messes with me mentally and I go crazy and break things. I'd rather get in a trade, have it move, and in a couple days or a couple hours be out of a trade, and then just kind of just like keep sneaking my hand in the cookie jar like that. But regardless, I was trading counter trend for a few years, and I'm doing my normal trade review and whatnot. And I noticed some seasonality issues, right? I noticed that, hey, every September I was getting hammered. Like, I forgot the technical quote that I gave you guys earlier. It's I can probably find it in this book right here, The Intelligent Investor by Benjamin Graham. Let me see. There it goes, right? I don't know if you guys can see it. I was getting beat to death. It's in the book. It's a technical term there, right? But I was getting beat to death every September. And fortunately, I have the luxury or experience of meeting a few kind of big players in the industry. And I was talking to them about random stuff and complaining about how bad I was in September and how it sucked and I didn't understand. And they schooled me. They said, Akil, well, you know about the summer slowdown, right? You know, the old saying, right? Sell in May and go away, where markets kind of lose their volatility over the summer. People are on vacation, spending all their trading profits. And it just like the summer's slow. It doesn't mean it's bad by any means. It's just a slower period in the market. What happens is after the summer, right, in September when things kick off again, the big boys come back from the Hamptons. They step inside the office. They look at the markets and they're like, man, what the hell have the kids been doing, right? Imagine it being like you went away for the weekend and you made the house all nice and you put everything in the right place, and then like you went away for the weekend, you left the kids at home, you said, hey, don't burn down the house, and then you come back and maybe the house is not burnt down, but like everything is everywhere, and then you gotta spend time putting it back to where you originally put it, right? This is me with like soccer balls and toys and hoodies and clothes on an everyday basis. It's like, here's a hook. Put it on the hook. And then I wake up in the morning and it's on the floor. And I'm like, what was the point of this hook? Anyway, big traders do the same thing. They come in from the summer vacation and they're like, oh man, what did these retailers do? Why is the euro price there? Man, the Nikkei, what are you doing here? Why are we that high? We shouldn't be that high. So they spend some time kind of fixing everything up and getting it to where they believe it should be. And we see directional movement in the market. And that directional movement, again, beat me to death. So what I decided to do is, and I was doing this anyway, but I wanted to add more diversification to my portfolio. My first idea was like, okay, well, how about I just don't trade September? Let me just take a whole month off. And I can tell you that wasn't going to be good. One, the whole probability, law of large numbers, consistency thing I told you earlier. Two, what am I going to do for a month if I'm not trading? Like, I'm going to sit there. The first week will be cool. I'll be chilling. I'll be like, man, I got so much free time. Then I'm going to start looking at charts and being like, oh, man, you know what? Looks like a good opportunity. You know what? Good day, right? And then I'm going to get myself into trouble. So I just can't do that. So I decided, hey, how about I implement a continuation strategy? I wanted to diversify anyway. And that's going to be something that will help me survive September and any other directional month while my counter trend strategy is getting beat to death. So that was my way of diversification. It was adding more strategies to take advantage of different market conditions, but it wasn't bouncing back and forth when I felt fit. All right, so let's head over to question 2 before I run out of time and spend an hour just on the first question. Hey, Akil. Thanks for always putting out content with such consistency. Consistency, look at that. This has been gold for me. Question, what about the conventional wisdom of sticking to one pair, one strategy? Does that limit the opportunities you see in the markets? On the other hand, fear not the man who has practiced 10,000 kicks once, but the man who has practiced one kick 10,000 times. Whoa, I'm not gonna kick. Gonna pull a hamstring. You guys would love to see that. I'm not gonna give you that pleasure. Trader goes on to say, I trade about 12 instruments only and wonder if I'm limiting myself to too few opportunities. I'm back and forward testing on other pairs, but I'm cautious. So firstly, I want to start off by digging into a few words and the words that or I guess the question, am I limiting myself? And we have to understand that every trader's situation is unique, right? Not just in skill or knowledge, but also like in their capability or their agenda. And by capability, what I mean is 2 things. One is your capacity, right? There are some people that may be able to handle a million things at once, which is great. But there are also some people that get very easily overwhelmed and can only focus on one thing at a time. This guy, right? Trading is about finding a strategy or a system that matches your personality and your philosophy on the markets. And there's not going to be a one-size-fits-all type of deal for that. Trying to do more, especially if it's more than you can handle, it's going to seem like a great idea because it's more frequency, and we assume that more frequency equals more money, even though time money is a myth, right? But the truth is, more times than not, it just usually leads to the trader becoming overwhelmed, and then they make mistakes, and then those mistakes lead them to less profit, and you might as well focus on one pair because you can actually be more profitable doing that. Now, that being said, there's a balance, right? You could be someone that can handle a million things at once, Or you can be someone that handles a small amount. I definitely don't think you want to be someone that does everything because you're going to get completely overwhelmed. But at the same time, you don't want to be too small because it's going to be pointless. I've told you guys this story before, so I'll make it short. But I remember working with a brilliant trader, probably the most brilliant trader I've ever known, who I think was more obsessed with creating the perfect strategy than actually trading it profitable. It was the game of finding new stuff. But long story short, he created a strategy that was like so complex, it only offered 2 opportunities a year. And again, I remember we had a live event in Kansas City. We brought in a coder, and the whole kind of project was going to be like, hey, we have our mastermind group. We are going to show you how we can take a strategy, apply the if-then syntax, and then code it into something mechanical, and then we can all use it to get rich. And we're going through the whole process, and the coder's looking at it. He presses his button to run through the data, and it's like, it only averages 2 trading opportunities a year. And the guy's like, yeah, right? It's like 90% correct. And then we're like, okay, well, that's great from, looking at it on a spreadsheet. But in reality, if you only have 2 trading opportunities a year, one, that puts a massive amount of pressure on you not to make any trading mistake, because one trading mistake, you're done for the year. One sick day, you may miss a signal and you're done for the year. But 2, you're just not going to make a lot of money, right? And at the end of the day, trading is about making money. So you don't necessarily want to be that cautious. You do need a certain amount of frequency to make it worth your while, right? If not, you might just dollar cost average into an index or something like that. But you also don't want to be young, gunslinging Akil trying to trade 20 pairs at a time and becoming completely overwhelmed and making mistakes and blowing accounts. So somewhere in the middle. You got to understand your lifestyle matters too, right? Some people have more or less time than others. If you have the time and energy to day trade, right, you can put out a set period of time to really go into lower time frames, hammer the markets, and get all the frequency you desire. Or you could be someone that works a 9 to 5, has a family and other obligations. You don't have a lot of free time, so you can only swing trade or maybe even be an end of day trader. And so you don't want to force it, I guess is what I'm trying to say. You want to figure out what is best for you, just mentally and psychologically, but also best for your schedule and your lifestyle as well. And then once you find out whatever that is, try to maximize that. Now, just on one more note, when it comes to the practicing one kick 10,000 times, right? There's different ways to build and scale your trading portfolio. You can, my trading mentor always said, 1 strategy, 1 pair, 1 time frame, right? You can do that and just start simple. And then when you want to grow it, you can either trade multiple strategies on a single pair, right? I had a trader that I work with that did that. His name was Tony. He traded the beast only, aka the pound yen. And it would freak traders out on the tier 1 trading platform because like Tony was known and famous for only trading the pound yen. They're like, dude, how the hell are you profitable by only trading 1 pair? Like, how do you get frequency? Well, although Tony only traded 1 pair, a very aggressive pair, just to say the least, right? He had multiple ways to attack it because he knew that pair so well that he knew kind of all the intricacies. Ooh, I nailed that word. I was so scared to say it. My God, I shouldn't have told you guys that. I should have just kind of been confident with it. Yeah, he knew all the intricacies of that pair. So he had like 4, 5, 6 different ways to trade it. So he can go in a pair and he can always find something. On the other hand, right, so you can do that. You can have multiple strategies on a single pair, or you can trade a single strategy on multiple pairs, right? So many of you guys are familiar with the cipher pattern. I'm not sure if you knew this, but if you don't know, now you know. Darren, right, one of our co-founders of Tier 1 Trading, he hates when I say inventor because he's like Akil. I didn't invent it. I didn't make it. I just found it. But he is the founder of the cipher pattern. It's funny because there's some other traders out there that will claim that they invented stuff and try to blackmail you and extort you if you try to use any of their stuff online and make a lot of younger traders really, really scared. But I'm not going to say any names, but if you know, you know. You can leave your comment below if you kind of want to guess who that is. But I'm not trying to stir any beef. That is dead legally, but just saying. Anyway, Darren, the founder of the cipher pattern, who actually founded the cipher pattern by accident. He was looking for an alternative way to trade Gartleys, and he stumbled upon something really cool and profitable because he was the founder of the cipher pattern, and he was too good to trade anything else than aside from the thing that he found, right? What he did was he traded that single strategy, Cipher, and he just did it on like 20 pairs. So he just had, I don't have my charts up in front of me. Well, I have them in front of me. I don't have them for you to see, but he would just have like 6 screens with a million pairs on there. He had our pattern recognition software, Enigma, for you guys who are familiar with that, running. And he would just sit back and just look for patterns and be like, oh, there we go. There we go. There we go. And I'd be like, hey, Darren, head and shoulders. I don't care. Double top. I don't care. Got a flag breakout. I don't care. And he'd type in, well, Kill, got a cipher. Yeah, I know. I know you got a cipher, Darren. But again, that's another way to do it. One pair, multiple strategies. You can trade one strategy, multiple pairs, or again, find that sweet spot in the middle of trading a handful of strategies on a handful of pairs. And personally speaking, that's what yours truly does. Kind of. And this actually brings us in. Oh man, I'm so good at segues, right? This brings us into the final comment that I got. It says, Akil, I've been following yours and Jason's contents for a few months now, and I've been really enjoying it. Thank you. You two really put out some quality information and insight. Yeah, we do. Perfect time to subscribe and follow if you're not already. That way you can take advantage of all the, the really enjoyable content and quality information and insight that we put out. He says, I'm curious as to what you consider a single strategy. Would you say that double tops and double bottoms is one strategy, and then say harmonic patterns like bats or Gartley's is another strategy? Because the more I watch you guys and read some of the trading books that you recommend and research, I feel like it all ties in together. And my answer is yes. And this is, I was actually having a good conversation. I think I'm going to put it out to you guys in a YouTube video. I'm pretty sure I recorded it. No, I did already. If you go back and watch the video I did, I might have cut the part out. Darn it. But there's a video I put out the other day on triangle patterns. If you go back and watch that, we're talking about triangles and pennants and whatnot. And I mentioned something in it that I hopefully shared and didn't cut out about I can actually, although it's a pennant pattern, it's a triangle, I can care less about what we call it because it doesn't affect how I trade it. All that matters is what price action does when it gets to either the high level or the low level. And I spoke about how, yeah, we have all these terminologies for stuff, but ultimately there's only 3 ways to trade. And it's always interesting to discuss this because I do think it depends on where you're at in your trading journey. I look at this as being like Neo in the Matrix, not that I'm considering myself as Neo in the Matrix. Ooh, my back. Oh, I don't know if you guys heard that. Crack the back. But I do think it's one of those things where you start off really literal and mechanical because you have to. You are a baby trader making baby steps. But then as you grow and get more experience, you kind of realize how things blend into each other. So I'm going to try to think of an example right here. So yes, you can have a double top, and that could be a trading strategy in its own right. So you can be like, hey, I'm going to trade double tops and double bottoms only. That's one strategy. You can have a bat pattern, and that could be a single strategy. You can have a pennant pattern. That's going to be a single strategy, right? You can look at all these as single strategies, but as you get older and more experienced in the market, and we'll keep the harmonics to the side, let's just focus on like double tops and head and shoulders and pennants. What you'll notice is that all of those strategies actually fall into something of the same category, and that's going to be price action trading, or you could be a classic chartist or a classic pattern trader. And you realize that the what, which is the double top or the head and shoulders or the insert, whatever you want it to be, is not as important as the where, which means where it's at in the overall analysis. And what happens is you go from trading just the thing, right, to just doing analysis and having the thing being a way that you get involved. So I started off by trading, I started off by trading double tops. I did this twice. I did it with AB equals CD patterns, and I did it with double tops, right? So there was a phase in my trading where I was just looking to get live as quickly as possible, but not really doing the work that I should have to become live. And I would learn about stuff. So I learned about the AB equals CD pattern, and I said, well, I can do that. I can draw a line. I can copy and paste it and draw another line. Boom, I got it. And my goal was just to like put a limit order at the end of every AB equals CD pattern. Yeah, you know how that went. Bad. Boom, right? So that didn't work. So then I did double tops. I'm like, okay, well, this is a little bit more price action-y. It's not as aggressive. I'm just going to trade every single double top and double bottom, and that's going to be my strategy. Yeah, another failure right there. And eventually, as I learned, right, I probably should have waited until I learned this before I started trading, but I was young and dumb and wanted to have fun in the market, right? And if losing money was having fun, I was having a grand old time, right? So I was taught something called the CTS system. We still teach it to this day. It's the Combined Technical Scoring System. And what the CTS system does is it takes in different technical factors like the double bottom and the AB equals CD, and it allows you to quantify it. So it takes all of these things along with another few other things, and you assign each of it a point value. So a double bottom or double top will be worth 2 points. An AB equals CD pattern would be worth 2 points. Higher time frame structure would be 2 points. Lower time frame structure, 1 point, right? You have this whole scale of assigned points. And there's two ways to approach trading this. One, you can just make a blanket statement and say, hey, I'm going to take the opportunities, every opportunity that offers me a minimum of 7 points, I'm going to take. So you do your analysis, you add it up, carry 1. Oh, I got 7. I can take trade. Oh, I have 6. I cannot take trade, right? As simple as that. Or you could be, and I apologize if I'm glitching, I kind of see it on the top of the screen right now. I'm going to keep moving my arms. Yeah, okay, there we go. Another way to do it is to have what I call, this was kind of the twist I put on it once I got into it because I valued certain things, is to have a CTS score, but also to have your non-negotiables, meaning that, hey, I need a score of 7 to take the trade, but I must have the RSI overbought, or it must be at structure, and that provided a little bit more safety and a little bit more specificity to what I valued. And what happened with this CTS system, and I guess before I go into what happened with it, why I valued this CTS system is because it gave me consistency, right? Instead of being wild gunslinging cowboy, right, and just looking for different things every time in the market, it gave me a list. I had to look for this, and then this, and then this, and then this, and then this. And I haven't traded CTS probably in over a decade, but if you notice, and you ever trade with me in the live rooms, I look at the same things in the same exact order every single time because I'm conditioned to do so. So what that CTS system did was it gave me different things to pay attention to. It made me pay attention to them on a regular basis, a consistent basis, and it made me do it in a very particular order. And what happened is in the future, I graduated from the CTS, right, where I no longer had to look at a point score, but I was still trading the CTS, right? So for example, if I were to look at a chart right now, if I were to see price action coming to a previous level of structure, which also is at the completion of AB equals CD pattern, it has a double top with the RSI going overbought and divergence on the second top, that is a beautiful sell signal for me. That is also a CTS trade. Structure, 2 points, double top, 2 points, that's 4. RSI overbought, 5. Divergence, 6. AB equals CD, 7, 8. That's a CTS of 8, right? That is a CTS score. So I'm doing it, but I'm not actually doing it. It's blended just into my style of trading, even though I'm actually doing it. So I say that because when we're looking at different strategies where it's like, oh, an AB equals CD is a strategy, or a double top is a strategy, or a pennant pattern is a strategy. Yes, those could be independent strategies, but they can also all be kind of moving parts within like a total, I don't even know what to call it. I just call myself a price action trader, price action trading strategy. And so I hope that makes sense, but it's 100% completely normal for you to feel like, hey, sometimes I look at all these things that I'm learning and they become one thing. Here's a good way to think about it, right? Think about it like a machine and different components. You have different components that stand on their own, but those different components can also be put together in a machine, or your sports reference. You have a team of players, and you have different players that have different specialties, right? And yes, those players could be good on their own, but when you add them to other players that complement them, it makes the team better, and you no longer see it as an individual player, you see them as a team. All right, guys, so that's going to wrap up today's session. I hope diving into these questions gave you some clarity on trading multiple strategies, handling different market conditions and finding that balance of what works for you and what doesn't work for you. Remember, trading isn't about doing the most, it's about doing what you can handle and doing that in a disciplined and consistent way. A way that fits your lifestyle and a way that also fits your personality. So whether you trade one strategy, whether you trade 10 strategies, whether you trade one pair, whether you trade 20 pairs, doesn't matter. The key is understanding your edge, sticking to it, and letting the law of large numbers work in your favor. So a big thank you again for everyone that participated in the YouTube polls, if you guys have been participants in the YouTube community in general, and of course, those of you who asked those amazing questions. I really enjoyed this episode. I hope you did as well, and make sure you follow the podcast or subscribe here on YouTube. That way you don't miss the next one. As always, keep learning, stay disciplined, trade smart, and until next time, plan your trade, trade your plan. Take care.